Have a great week, everybody. How's everyone doing? So I tweeted yesterday, I have no idea what to do in any of the markets at this time. And that makes me feel uncomfortable. So I tell myself, be patient and you'll see it when it's there. Okay, so Euro pound reached objectives that I've been talking about. Did it pretty quickly, almost as good as being net short the dollar or net long euro, approaching some resistance here. I'm not saying fade it and get short, but we're in a take profit zone on at least half if you got long last week, right in here. I'm not saying it's over. I think this is gonna lead the dollar break all the way. And as you can tell, what's different about this dollar decline is this is happening in euro pound instead of what was happening during all the previous dollar declines. It's always been my contention that a true bear market in the dollar would be led by euro strength, not cable strength. Okay, so Sean's got a poem. Looking at S&Ps, they're popping here. You know, there's talk of an intermeeting cut, and you know, it looks like we could get an ABC here, but I think I'm just going to wait and see if we could flush the low one more time. You know, there is some decent divergence here on the 1 hour, but just one more bad news flash. But you could see here on the 1 hour, we're putting in a higher low. And you know what? If you miss this whole big decline in the S&Ps, all you have to do is just wait for this failing rally. If it doesn't happen, right, you're going to miss a big bear market. There'll be another chance. But all you have to do is really just be patient. Here's a couple fib levels, you know, halfway back's 31.25 and 61.8 up around 31.90. I actually think that it should have some trouble back at the throwover line, which it took out, traded back underneath it. Talked about it last week. I said, there's a problem if we close back underneath this throwover line. You could see it. It was the old megaphone. So what does this do? See this megaphone line, this blue line here? And the bottom of the megaphone's down here. So we had the throw over. I actually thought we'd bounce off it one more time, just ate right through it. So, you know, that's going to come in around 3,100. So I'm going to be patient and wait for a rally to sell up around 3,100. Would I like to be long from down here and make some money? Yeah, but it's an inside day. Oh, this is a week, inside week. I bet it's an inside day too. Let's see. No, we were able to take out yesterday, Friday's high. So miss it or not, if I miss the reflex rally, fine. But if we made a new low, I might take a shot down here in the S&Ps as well as crude oil. Kind of a similar pattern, isn't it? And, you know, this wasn't exactly great divergence with a 23 level, but, you know, I was trying to bottom pick it last week and basically around my average here. So we'll see what happens. I would add if we got one more break, but we could be headed back to 50. And actually, the big surprise would be as we get back to 50, you know, and start taking out this 50 and this 50 level. This would be a real great shorting opportunity if we got back up there. 3071 ABCD. Okay, Ben. So not quite 3,100. And Sean's looking for 43.25. All right, Sean, that would be what, one more low in crude? Yeah, it would be one more. So we just flushed the 44 out one more time. Okay, and also keep in mind we have NFP this week, and for Astro guys, we have a super moon on Friday. So I think that's about all I wanted to talk about. I just wanted to, talk about this. We're going to get pops in the metals and everything, but I was talking to Steve yesterday, and when I look at the monthly chart in silver, and you guys know I was bearish last week on the third drive. When I look at this, especially if we start taking out this 16 level, what is so bullish about silver here? I understand gold is bullish, even though look at what we failed from near the 78.6 level. But I look at silver and I go, God, we take out this low, around this 16 level, 14's next. And actually, I can make a case for 14 if I take this high here, and I'm going to turn it over to Blake. 1950 to 1650 is $3, right? So if you get 1.618 of this, call this A, and then call this A, B, C for B, and then C is 1.618 of this, and we're tipping towards recession. This would actually measure down to the $14 area. And here's the weekly down here, which is major support. Okay, and we've tried this $14 level, and I think we're going to take out 14 and flush and get some type of panic in silver before I'm going to be an aggressive buyer. Thank you very much, David. And with that being said, the guy who loves this action more than me because he's a young man, he's a gladiator, he's a czar, he's a pip czar. How are you, bro? How are you, buddy? I think your prayers are answered.
Man, I tell you what, this volatility has been something else. It's been great. As I mentioned in the week ahead video, volatility is good. You just got to be able to, navigate around it. Trade smaller, gives you plenty of opportunities for entries, gives you room to allow your trade to work. But because of the volatility, it will it can hurt you if you are not careful and if you're not trading an appropriate size position.
You talked about it. So besides less leverage, Blake, I wanted to ask you this morning, that with this increased volatility, do you drill down a little bit more on time frames than you normally would when there isn't volatility? I mean, if you really trade a lot off the hourly, maybe you go to a 30 or 15-minute chart.
Yeah, I do a lot of 15-minute charts. Personally, you can see, well, I'm on an hourly right now, but a lot of 15-minute charts. Look for a lot of divergences. Look for specific places that I want to be long or short, because with volatility, there's a good chance that you're going to get there. And so here's this is going to be,
it reduces the risk on the trade too, doesn't it?
What?
It reduces the risk on the trade using the shorter TF.
Yeah. Well, yeah. I mean, the problem is if you go too short of a time frame, your basic or your technical analysis is probably going to be less relevant. Okay. So, that's why I tend to make sure that I start off with the bigger charts first before making my way to the shorter time frames. But I'm going to give you a good example. This is the dollar yen, right? You'll notice I had this this fib level right here was actually drawn from where I saw pre-market activity. I saw pre-market the dollar yen was trading below 107, so that's where I was kind of drawing my fibs. But you can do that. And by the way, I also got a bunch of questions yesterday about where I get my quotes. I use JP Morgan. Now let me give you a little secret, and you might be able to do this if you have a mobile device. And I've never tried it, so I've got I obviously trade through JP Morgan, so they're my main dealer. I deal through Barclays too, but my main dealer is JP Morgan. what you can probably do, and I'm going to give you guys a little bit of a secret here. Download the JP Morgan app on your phone. If you download the JP Morgan app on your phone, you can see, I think, again, I have a live account, so it's, but I always have to log in anyway. So if you have a JP Morgan, if you download the app, it'll allow you to see prices before you actually log in. So I was dealing 3-4 hours before everybody else yesterday. Now, that doesn't mean that you're going to be able to trade, but at least you can see where prices are early Sunday morning, or depending on where you're at. I'm just talking about you're going to be able to see early prices. So download the app. I bought dollar yen yesterday at 107.20. That's before anybody else was able to deal, because I was actually at Home Depot when we were trading at 107.10, and I sat down and we were at like 107.20 offer, and I took out an offer and I sold it after we opened at the 60 level. So you can see right here, I bought it like right around here, right somewhere around here, and then I sold it at the open. And then I've been, trading it ever since. But I'm telling you guys that as maybe a little bit of a secret. If you guys want to know where pre-market activity is, Sunday before most FX brokers open, because if you use like Gain Capital or FXCM or Oanda might have prices from what I hear, but some brokers do show you quotes, some don't. So just, that's a little trade secret. Like I said, you won't be able to log in, you won't be able to trade because, you have to have a JP Morgan account, and typically you're going to have an institutional account in order to trade that. But just a little tidbit of information. Now let's talk about targeted trading, and I'm going to give you an example of what I'm looking at with the dollar yen. This will give you a good example of what I'm thinking. So I look at the S&P, and what I think we're doing in the S&P is we're bear flagging. You guys see that flag? Pretty clear as far as I'm concerned. That's what we're dealing with. We did pivot right off of that low. I was watching it very carefully as we were down there, and I think the S&P for now, unless we get some, as Dale talked about earlier, some, central bank response, we're probably going to be doing, oops, I didn't want to do that. We're probably going to be doing this for the next couple of, dang it, what? Hold on. Lock, stay in drawing mode. That's what I want to do. Okay. We're probably going to be doing, sorry guys, this for the next couple of days, right? And then eventually sell off. That's what I think is going to happen. If you ask me like what my opinion is of where equities are going, that's what I think. Okay. Now, whether I'm right or wrong doesn't really matter at this moment. One of the things that those of you that have listened to me for a long period of time, I'm pretty good at forecasting this type of stuff, but that's why I do what I do. But if I had to guess, that's what I would think. We're consolidating before our next leg lower. I don't think we're recovering. The way the price action is, I don't think we're recovering back to like 31.50 yet. Now, again, if there's central banks are all, you see, the Bank of Japan last night, you got RBA tonight, you get some sort of coordinated, response from central banks. Yeah, maybe we might see, excuse me. Sorry about that, guys. We might see, a bigger rally in equities, but for right now, remember the Fed meets in 2 weeks. Do they really need to act between now and 2 weeks from now? What do you think? And I'm going to ask you guys this question really quick, and let me see if I can get your responses in the chat box. And I'll pause for a moment to take your answers. What do you think's the Fed's biggest weapon? What do you guys think? What's the Fed's biggest weapon?
In, inflation manipulation. No, I'm serious about it. That's their
Well,
biggest weapon. The fact that they can understate inflation, which overstates GDP growth, also overstates the amount of stimulus they can keep throwing at the economy.
Rob, I agree with your answer. Pip and I agree with your answer.
By the way, Blake, we have a friend asking about the JP Morgan app that you talked about. He says they have 5 applications. Is it the one called Markets app, the one with the black icon? That's what he's asking.
Let me look. Yeah, e-execute. So if you guys, okay. Colin said, "Hey Blake, just read the JP Morgan app. It asked me for a username and password. Tried downloading JP Morgan e-execute. Indicative prices are shown. Not sure if this helps." Okay, yeah, I'm honestly I can't remember because it's been years since I put the app on my phone. So I don't know if you have to actually install some sort of username and password ahead of time. I have no idea. But thanks. You, like I said, you guys can try it. I don't know if it's going to work for you, and if not, you just delete the app right off your phone. Okay, so getting back to what I think is the Fed's biggest weapon in the market is their words, their jawboning, their mouth. They can use that as one of their tools. Now, obviously, interest rates ultimately are what's going to move the market, but their words and how they tailor their statements and their speeches is, in my opinion, the Fed's biggest tool, because the market moves based on interest rate expectations. And if I expect that the Fed is going to be aggressively cutting rates in the next couple weeks, and they could possibly do it between now and 2 weeks from now, am I going to be a little bit more skeptical to short equities in this case? Yeah, of course I am. Or if I own stocks, am I going to be I'll be a little bit less apt to sell my stocks if I know that the Fed is going to backstop what I'm doing. So yeah, and Pippin said, look at the last 15-minute S&P move on Friday. Yeah, I was a little irritated about that too, by the way. I was long in the S&P, and after Powell said what he said, basically looking to use whatever tools necessary, blah 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 blah. I got long the S&P, and I sat there and I'm like, damn, ain't gonna do anything. I took a little profit, and I'm like, fine, I'm done. It's Friday. It's 15 minutes before the market close. I'm done. I was so tired. I was so tired. I turned off my computer, closed everything down, and I took a nap. And I got up an hour later before the markets all closed, and I looked at the price action. I was like, mother son of a gun. But what happened is the markets really responded to what the Fed chairman said. And the fact of the matter is everybody right now is nervous that the Fed might have some coordinated effort. They might actually cut rates surprisingly at any moment. People are a little nervous shorting the market. People are buying the market based on that. Don't fight the Fed. Okay, well, I'm going to buy stocks anyway. So if you guys ask me what I think the Fed's most valuable weapon is, their words, while they are respected, while they are as long as those words are used carefully. Obviously, if the Fed keeps warning and warning and warning and warning and never does anything, then you got problems, because then now you have a viability issue. But the Fed, for right now, everybody respects what they're doing. And so if the Fed says, hey, we can act if we need to, people are going to go, okay, well then, I need to respect what they're saying here. So for that reason, that's why I think that the market is somewhat supported at this moment. Okay. So, Brian asked, what will happen to mortgage rates if there's a rate cut? I don't know. I mean, I'm assuming rates are going to stay low. So, I mean, they're basically giving money away at this point. So I'm assuming rates are going to just continue to stay low. I don't know if there's going to be a lot of movement there in mortgage rates per se, because, if you look at the bond market's already reflecting the Fed being more aggressive anyway. So, I don't know the answer to the question, but looking at the S&P, like if let's say I'm correct, going back to what my expectations here are, let's say I'm correct, and I think that the Fed is going to be cutting rates, okay, or excuse me, supportive of the market, but the S&P is going to be in this bear flag pattern before we break down eventually. So what I think is going to happen with the dollar yen, for example, is the dollar yen is going to be in the middle of doing something that looks something like this, right? So I think we're in a consolidation in the dollar yen. So therefore, if this is where I think the dollar yen is trading at, and I think what it's going to be doing, I'm going to trade it accordingly. Now, if I have an overall bearish view of the S&P, what I'd rather do is I'd rather, wait for the dollar yen to rally somewhere up here and then look for shorts, because I might be a little off on my drawing. So, and then I'd look for some sort of fib level to trade into. But and conversely, if I wanted to be on the long side, I wait for a retest of this trend line down here, and then get long down at these levels. But this is the type of market that we have really good volatility, and it can work in your favor, but it can work against you. So make sure that you're looking for those specific places to enter the market and wait for it. Like I said about 15, 20 minutes ago, the good news is when you have this type of volatility in the market, the risk of the market coming to your prices or very close to your prices is much higher because we have this volatility. Now, one last thing I do want to talk about before I pass it back over to Steve and Dale, because Stelios isn't here. And by the way, I have to mention to Dale, it's nice you beat up on silver while Stelios isn't here. I see how that works. So he's not here to defend himself or his position.
Oh, I enjoy it more when he's here.
I'm just kidding. I was just harassing you. But let's talk a little bit about the euro dollar, because the euro, as you guys know, I've been very bullish the euro, especially with what we've seen in equities. Like I knew, and you guys knew, because we talked a lot about it, that in the event the stock market sold off, you're going to see a carry trade unwind. One of the best carry trades out there is, and has been, shorting euros, buying everything else. Shorting euros, buying pesos, yada, 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 yada. So naturally, when the stock market comes under pressure, you're going to see the euro fly. And the euro is really ripping heads off today. We are at the 200-day or above the 200-day moving average. Now, what I think is we're going to test this 111.40 level today, the 78%. Whether we close above the 200-day moving average today is not, well, that'll be watched, in my opinion. But as of right now, I think we have to be very careful with the euro as it's squeezed quite a bit. And if I'm correct here in my assessment with the S&P, let's go back over to the S&P. If I think the S&P is bouncing around and we're going to be, above and below 3K or 2950, somewhere around here, then you have to be a little bit more careful with euro longs up at these levels. If the euro does reach today for 111.40, I might actually sell it. I think that if you look at the intraday moves, we're divergent right now. So like one more stab up here, and I might take a shot at it just on the short side from an intraday perspective. Let me put it to you this way. I don't plan on staying short the euro if I get short the euro. I'm in the camp of buying the euro. What I really want to do, to be quite honest, is I want to buy the euro somewhere down here. I would love to buy a dip back towards 110.50, 110.20. That's what I'd love to do. I may not get that opportunity. We may not get that opportunity, but that's something that, you know, I'm obviously looking at, you know, here going into the next couple of days, if it comes to light. So with that being said, you know, I'm going to pass it over to my colleagues, Steve and Coach, since Stelios is not here today. Good morning, Steve.
Yeah, it's a national holiday here called Clean Monday.
It's called Clean Monday?
Yeah, exactly. As you heard it, it's, you know, it's the beginning of the last 40 days before the Easter. So, you know, kids
this
are
is
going
where they
out.
clean out Euro shorts on Monday? Is that what that is?
This is when you supposedly start, is it called fasting?
Fasting.
Fasting, yeah.
Okay. Yeah, before Easter. Got it.
Yeah,
Greek Easter is coming up. What's this saying they say for Greek Easter? I'm off the top of my tongue. He has risen.
You mean that Kali Anastasi or whatever?
I forget. You know, when you're at Greek Orthodox, you say he.
Christos Anesti, yeah.
Is that what it is? Astanesti? I forget.
Christos Anesti, which is like
Christos Anesti. Yeah, Christos Anesti. Yeah, that's right. Yeah, it's been a while since I've been to church. Whoops.
You're not losing much. I bet nothing has changed.
And just so you guys know this, I for those of you that are new listeners, I actually got married in Greece back in 2002. I'm married to a half Greek woman, and I was married on the island of Milos. So I am actually baptized Greek Orthodox because I had to be able to actually get married in Greece, for those of you that are not aware. So anyway, it's been a while. It has been a while. But anyway, so Steve, crazy volatility, right?
Yeah, and I think what turned stocks lower today, I don't know if you, probably you saw, is OECD's warning that global growth might be cut to half by the coronavirus impact. So they're now estimating that global growth might go down from 2.9% to 1.5%.
And you know what? I don't think that's a, you know, off expectation, frankly.
No. And you know, a lot of people, I see a lot of people making arguments like, oh my God, you know, this move has been like so exacerbated to the downside, etc. But they don't take into account that this is what happens when you have extreme valuations one direction or the other. So this is what happened when we had extreme valuations in 2008, 2009, when S&P hit 670. And this is what happens when you have valuations being so inflated, and mostly due to multiple expansions. When you get some kind of a you know, black swan event, you know, there is a lot of downside until you can reach, you know, more fairly valued markets.
Yeah, I mean, when earnings are trading, you know, 21 times, I mean, what do you expect? You know, so now we're probably back at like 17, 18 times earnings.
Yeah, and in my opinion, we still have a lot more downside, even if, which they will. You said very well that, you know, you expect that there's going to be interventions one way or another from central banks, and I do expect more or less the same thing. But in this case, as we've explained last week, I don't think this can solve the problem in any way. So I do expect that any rally due to that is going to be a great selling opportunity for another leg lower.
Yeah, I would agree with that. And, you know, what we're going to be doing here on the FACE webinar probably over the next couple of weeks is trying to figure out where those levels are. So, so anyway, hey, I want to thank everybody for being here. Remember, if you haven't tried out ForexAnalytix, if you're not in the chat room with us every day, make sure you do so. It's only $1 for 10 days just to try it out, and then you can be in the chat rooms with us and try the premium product and get all our analysis to your, you know, to your mobile device and whatnot. So make sure you give that a whirl, and then also visit Forest Park FX. If you're not happy with your brokerage firm that you're using, I know you can't use a JP Morgan, but if you're not happy with the brokerage firm that you're using, make sure you reach out to them, because their job is to find you a broker that really, you know, suits your needs. And you can find them on the reimbursement program on ForexAnalytix. If you scroll down, this is how you can
Let me add to this that even if you're happy with the brokerage firm you are at, you can still stay with the same brokerage firm and start getting money back.
Benefits.
Yeah.
Yeah.
So you have nothing to lose, even if you're super happy with your broker, to contact them. I mean, it's a win-win situation. Also, Blake, I think you should. There might be some people here that haven't watched the week ahead video, so you might want to tell them about the surprise.
Yeah, I mean, I had a great. I got to get running, but yeah, if you guys haven't watched the week ahead video, you guys got. I have an interview with Chris Weston from Pepperstone Securities. Really great insights. If you haven't watched it, make sure you get to it. So I got to roll. I got to get to the market.
Okay, bro.
You guys have a good one.
Enjoy.
All right.
Bye.
Hey, Steve.
Hey, Coach. How was the weekend?
How are you, buddy? Good.
Good. How have you been?
Just trying to be patient and wait until I see something.
Okay. The good thing is there are a lot of things to see during the past few days,
all right? That's
right?
one of the advantages of being part of a team is I could come in with a blank slate, and by the time FACE is over, my attention will be towards something I didn't even see on my own. So go ahead, buddy.
Okay, so obviously, you know, volatility is still the name of the game, and I believe that it's going to continue to be at least for a few more weeks. When we see events like this, where VIX spiked to almost 50, you will very, very, very rarely, you know, get down to like, you know, non-existing volatility like in one go. Bottom line, I do think that even if we get you know, a decent recovery from the markets, and sometimes, you know, in sharp moves like this one, you might even get a sharp recovery, and in my opinion, that's going to be a huge bull trap, because I've seen a lot of people thinking that the market can now go vertical and be, I'm going to go quote a specific person, but that's not the only one I saw, can be to new all-time highs by April. But in my opinion, if you want to bet that this market is going to be to new all-time highs in 1.5 months from now, I have a bridge to sell you, because the chances of that happening are, you know, are very, very slim. Nothing is impossible, but in my opinion, that's a very, very slim possibility. So I do think we might even see new lows from here before we get like a big recovery. Today, the market is trying to, you know, decide that reversal on Friday, if it's worth betting on or not. Blake already showed the 4-hour chart. So on the 4-hour chart, so far, this could just be a bear flag, right? That's why I'm saying that I wouldn't rule out, you know, a lower low before we can see a bigger recovery. So something like this. Okay, now I obviously overdid the possible reaction higher, but I would say in any case, anything, you know, close to 3,100, perhaps a little bit more than that, is going to be, you know, a nice selling opportunity. Now, if you want to look at targets, here is the daily. We already today, you know, not coincidentally, we got rejected from this important support resistance area at 3,020. But you know, at a larger recovery, would be looking for 3,080, 3,125, and 3,150. I very much doubt that the market can make it beyond that before it then tanks lower once again. Now, once we do get some good evidence that, you know, whatever recovery we get is over, then we can start getting measured fib extension targets for more downside, okay? Because we might have a lot more downside to go. Now, as Blake said, and I agree 100%, I think you should be a little bit more careful because, for the time being, the downside might be more limited. We might first need to get, some type of a decent recovery before that happens. Now, if you're still short, I'm not saying that you should, completely cut off your position. Hopefully you've already, taken some profit and you can keep like 1/3 of your position and see what happens from there. Now, personally, there is, before I go to the more majors, because we do have some nice developments there as well, and I'm going to start with the euro. But before I go there, I want to, mention what I've set my eyes on, and I've set my eyes on palladium. For those of you that didn't notice, palladium on Friday at some point was more than 13% down. I doubt that palladium has ever had such a day ever in its history, not at least as long as, there was some demand for this metal. So Friday's reversal is like the biggest reversal you could have on any type of chart. I mean, 13% lower is something that you would expect only a stock to be able to produce, and not a precious metal. And now we've broken through this ascending wedge. So I started selling palladium on Friday. Those that were on the chat room know it. I started selling palladium on Friday and I started accumulating a position. I now have 1/3 of a position, and I'm not looking to building like a full position. And the reason I'm not willing to build a full position is, as I said, palladium was 13% lower on Friday. That shows you that volatility is extreme. So you should always adjust your positions based both on the confidence you have on a position, on a specific trade, and to volatility, right? Because, when my full position is used on, usually, for example, to trade an FX pair, that has, a rather low volatility, it doesn't make much sense to use the same size of position if I want to trade something that actually on Friday moved 13%, because it will be like I have, multiple times my regular position having to do with how much I'm looking to make, and most importantly, because that's the only thing that market matters, how much I'm willing to lose. Having said that, just look at the recovery we had on the 4-hour chart. So that was the all-time high that we had on Friday, almost at 2,900. Look at this sharp move lower and look at the nature of the rebound. I haven't even fib extended that because I didn't really care to, but I'm guessing it's something like 50%. Let's see. Yeah, exactly a 50% fib. And now we've broken through this pennant and we're moving lower. So I might actually add a little bit more and take my position to like half a position, because I do think that palladium can actually crash really hard from here, judging from the first leg lower. And I still think that palladium can get very, very quickly to 2,000 from 2,900, although a lot of people would expect that that's like almost an impossible move to happen. I think that you should have realized by now that markets can very frequently produce impossible moves. And when I say frequently, I mean, frequently in comparison to the, to the infrequent nature of the word impossible. Major support at 2,500. Below there, I really think that we should be looking at another $250 of downside. And that concludes what I wanted to say about palladium. I don't know how many of you can actually trade it. Not all brokers offer palladium, but for me, it's one of the best trades out there. In fact, I'm kind of angry at myself for not shorting it earlier, because I've told you here multiple times that palladium is acting more like a risk-on, risk-off metal. And the fact that palladium was diverging so hugely with what risk was doing, I mean, stock indices were like getting destroyed and palladium was pushing to all-time highs. That was something that, in my opinion, could not last for much longer. And, that's why we got this massive move on Friday. Now there's a friend asking for platinum. Platinum initially, first of all, broke through 950, 955. If you remember, I made it very, very clear here that 950, 955 was a pivot for this market. So I said, above there, you can feel free to be long. Below there, we should be headed towards 900, 910, which, hosted multiple supports. But, having broken through 950, then everything starts become, even less likely, having to do with potential upside. Being long at 910, also did offer a decent risk reward. But definitely, as you see, platinum is plunging lower, and we've now broken through this ascending channel. So any way you slice it, this is some very bearish price action, and you'll see something that platinum has in common here with USD yen. Actually, it has a lot of things in common with USD yen, having to do with technical structures in the shorter term. First of all, both of them broke through a multi-year descending trendline resistance and then proved to be a false break. Right, so you can see it here in platinum, and you can see it here in USD yen. Same deal, multi-year descending trendline resistance, broke through it, trapped probably a lot of people on the long side and on the wrong side of the market, got rejected from this channel's trendline resistance, and hasn't looked back since. So I have to say that I would be very, very skeptical being long in this case, because not only the market has reversed hard, but it has reversed hard after fooling people that it's headed in the opposite direction. So both in the case of USD yen and in the case of platinum, I would definitely favor the downside. And in any type of rebound we get in USD yen, since now I switched to USD yen, I would be looking for this ascending channel, which is now broken, its trend line support, to likely act as resistance. Okay. Now, let me go through some of the questions. Yeah, euro. I promised I'll talk about euro, and actually, good thing I waited a little bit, because euro has even shot even higher since I did that. And now you have to pay very close attention to this, because euro turned from 107 to 111.50 within 2, 4, 6 trading days. So since last Monday, it's been 5.5 trading days to be exact, and we're now testing this channel's trendline resistance. You can see that this channel,
the whole world changed in a week, didn't it, Steve?
Oh yeah, absolutely. If you remember, Coach, I said, and I'll stand to it, even if we turn lower from here, I said multiple times, Euro USD remains in a downtrend. There is no question about it, because we still have a sequence. Short it. Yeah, but I would not be willing to chase it lower, because in my opinion, the next big move, whenever that happens, even if that's in a year from now, is not going to be to the downside, but it's going to be to the upside for the Euro USD. So I'm perfectly willing to let it move lower, in a slow, choppy manner, as it's been doing for years. But I do think that at some point it's going to explode higher, get everybody caught off guard, and squeeze the hell out of everybody.
That may be happening right now. What do you
think?
We're
definitely testing an important trendline resistance. I can tell you that much.
So a pullback. I like if we get your scenario with the pullback to that support, around 61.8 back, you got to give it a shot with stops under the low.
I doubt it. I mean, I didn't want to mark a specific pullback. I just wanted to show, I always do this when I want to show a pivot. You know what I mean? That it's either higher or lower from here. But personally,
you don't think we could pull back to 109?
I think that we will probably have a shallower pullback. So I do like Blake's idea. 10. I mean, from a risk reward perspective, you might want to try shorting the Euro USD here. Look for a pullback towards 110, and from 110, look for another move higher, in which case I think that would probably then squeeze above this trend line resistance and probably accelerate to the upside. And I see no reason why we can't make it closer to 115. I mean, in 6 days, we made it from like 1075 to 1150. So
Okay.
yeah, I mean, I don't see much of a reason why we can't squeeze much higher. 113 looks to me like the first target in that case, and after that, closer to 115. So that's what I think about the Euro USD, and of course, needless to say, that makes my outlook for the DXY the complete inverse to that, right? So
10-year yields are overshooting, opening at 107 this morning.
Yeah. By the way, yes, and by overshooting, you probably mean the 161.8% extension target that we had. Yes, you're absolutely right. Yields are now officially close to 1%. Now, do what you wish with that. I consider it.
There's that trade I made at the bottom.
Yeah. When you bought at zero. Yeah.
The growth trade.
Yeah, 30-year yields at 163, by the way. Needless to say, yields are moving lower. The curve though is continuing to steepen a little bit. And if you remember what we said last week, we got so far what we want to see as a recession signal. We first got the yield curve inverting, and now we get the yield curve steepening. And usually that is when you see a big damage in the markets and an economy slipping in a recession. Not when you get the initial inversion, but when you get the market, the rates steepening afterwards, because they discount action from central banks, which, as you know very well, affects more the short end of the curve. But then
inflation premium comes in to the
long end. And not only, even if you want to discount, a recession today, I mean, why is this recession, going to affect that much 30-year yields? In the sense that in 30 years you'll have gone through another 4 or 5 business cycles. You know what I mean?
Yeah.
So yeah, who knows? That's why the long end of the curve is never willing to follow that much, because it can't be manipulated that much from central banks. I mean, it is indirectly getting manipulated, but not easily directly. So that's why we see steepening. So that's the situation here. Let me go through some of the questions now that we've talked about. Great Euro Pound call. They're telling you, Dale, speaking of the Euro Pound, I wrote during the weekend, and I talked about it on Friday on the chat room as well. 86 cents was a key resistance area, and the reason it was a key resistance area, you can see this. This is a rectangle, right? This is a range from 82.75 to 86. So by breaking through 86, in essence, we triggered this double bottom, or a rectangle, or you can look at it any way you want, because in both cases the target is exactly the same, which is the extension of this range's height, from the breakout to wherever it takes us. And coincidentally or not, that aims exactly at the 61.8 of this move lower at 89.25. So, it is what it is. I mean, this is a textbook trade having to do with, a technical formation broken out. Now, if you get lucky and you get a retest of 86, needless to say, that's a great buying opportunity. Okay. Let's see. Yeah, a lot of comments about that. USDMXN, by the way, USDMXN has now reached another trade that actually caught people in the wrong side of the market, right? Breakdown from multi-year triangle, reversal, and now we're actually back to the point that we are testing this triangle's resistance again. and also confluencing with this horizontal support resistance area in the 78.6 of that last move lower at 1988. So bottom line, huge vertical recovery here in USDMXN, might be in need of some type of a pullback before it eventually breaks higher. So, I wouldn't be chasing this market, right here. But, any pullback towards 1925 is probably not a bad idea to attempt to buy it. Another pair I wanted to talk about, actually two more pairs I wanted to definitely talk about. One of them is USD CAD. And the reason I wanted to talk about USD CAD is look at this massive price action that we've had so far today. So Friday, we test this ascending channel's trendline resistance, also horizontal support resistance area, 127% extension. You can see that was actually a triple confluence of resistances. We get initially rejected. We open the wick again there, and we get like a massive move lower. But look at this. Look where that found support, at the breakout area at 133.20. So, beautiful reaction from there, but I can't really turn bearish as long as we stay above this breakout area. Okay. And USD NOK, another one that's very interesting. Friday tagged this multi-year ascending channel perfectly before getting rejected. And today, so far, we have a bearish engulfing candlestick, which hasn't managed, though, to break through 930 support. So bottom line, beautiful rejection, but I want to see a move below 930 to feel more confident that there is more downside here. And that concludes those that I had in mind to talk about, as very, very important. So let me now go through your questions. Hi, Steve, could you please present a couple of tickets for gold, silver miners? Thanks. Dimitri, actually, I haven't done any due diligence on miners because I very, very, very rarely trade stocks, specific stocks. I can tell you, though, two things, because I have been in generally following the industry, and I can tell you that it's not by accident that the miners are trading at a discount to what other stocks have been doing, is because in the past, the miners have proved that they can actually burn a lot of money. And even when gold was doing well, the miners were not doing that well. So there is a lot of hesitance from the market to throw money at the miners, especially if you're talking about junior miners. I think you need to be, quite an expert in deciding, because junior markets junior miners are like big gambles. So some of them will do amazingly, but you need to have a good grasp of their fundamentals. So if you choose properly junior miners, you might end up making like 10 times your money within 1 year, but some of them will go under. So,
you got to watch the balance sheet on these and the debt that they're carrying. And also keep in mind what Mark Twain said about what's a gold mine. And he said 2 liars standing over a hole. That's what Mark Twain said.
I actually didn't know that, but it's good.
Yeah. All right.
Speaking of that, though, I wanted to talk about gold. And a lot of people are looking at gold and scratching their heads, and they're like, what the hell is happening here with gold? I mean, we got to a new high, we got like a little consolidation here, and whoop, we just sliced through it in what seems like, in a temporary impulsive move lower. And, I'll straight ahead answer what's happening here with gold. Gold traders are being afraid that we're headed into an event like the one we had in 2008, 2009, in which case they believe that deflation is what's going to be the main driver for the metals, meaning that they believe that deflation is going to make holding gold and silver less appealing, opportunity cost, to put it simply, and they're trying to discount such a case. That's why even with dollar moving lower, we actually have ended up having gold selling off at the same time, although it's priced in dollars. So personally, I'm not very much worried about it. I do think, though, that this move can unfold even further to the downside. Okay, so let me make it very, very clear. I wouldn't be buying gold right now, although so far it's holding the retest of these broken symmetrical triangles, trend line resistance as support. So from a risk-reward perspective, I do understand that it looks appealing buying gold here. Personally, I'm not doing that anyhow. I have exposure in gold. I have physical gold, so I have no reason to actually, go in the financial markets and buy it if I want to have an exposure, and I intend to keep my physical gold no matter what. But I do believe that this move can unfold even further.
Your cat said now, or was it
Yeah,
meow?
yeah.
Buy it now.
She just wanted to
Yeah, you could be
literally
on the air.
lie down on my mouse pad, but there's no space for
Well,
me
you
to
said I'm
actually.
going to wait to buy it later, and your cat said now.
So I would be looking for lower levels. Now, having to do with silver, you mentioned that before, Dale. First of all, silver so far is holding this previous low on a daily closing basis,
it
but
was
I have
so
to.
much weaker than gold all the way.
It was, and I have to admit that I don't like this price action, so it tells me that it might want to move lower once again. Needless to say, I'm gonna be loading the boat if silver, for some reason, just plunges lower. I mean, as I told you yesterday, if this gets exacerbated and we see levels between 12 and 14, I'm actually going to start buying physical silver as well. Because I really believe that in the medium to long term, silver is going to shine. Keep in mind,
you better start weight training, because when you stack silver, it's not like having 10 Krugs. It's like
that is true.
You're lifting weight, man. Get a silver coin bag and swing it around and tell me if you get a hernia.
Yeah, that is true. It has nothing to do with gold. Gold you can actually
more portable.
Gold you can actually stash a lot of it in in a small space, right?
Yeah.
Silver is not the same deal. That is very, very true.
You got to dig a hole.
Yeah, but on the other hand, I'd rather have some physical silver as well, because if things go really bad, the best guarantee you have is having the physical one. So I think we covered all metals for sure. I mean, palladium, platinum. Okay, the only thing we didn't actually is copper. Now, for copper, I'm going to say what I said the other week, which is copper still looks weak, still looks bearish, but the fact that it hasn't done much worse, with the epicenter of the problem being in China, which we know that China is the marginal buyer of copper and a huge buyer in general anyhow, and by the fact that we have seen this huge sell-off, is telling me that I really don't want to be short copper, right? Because if copper hasn't managed to do much more than this to the downside, with the markets being in distress, why do I want to be short? Now, on the other hand, do I want to be long? No. So what do? Very easy. I don't do anything about it. I mean, there are other things to trade. For example, I'm now trading, palladium. Why do I need to have an exposure in every single ticker I'm looking at? I don't. Now let me see. Questions. USDMXN, we did cover that. Close to sell. Dale, I think. Morning, Steve. Good morning. Yes, I agree. In the short term, Sean, USDMXN is testing key resistance. So definitely, I think, as a short term trade, shorting USDMXN here does make sense. Personally, though, probably I would be looking, since I'm looking for markets to tank even further, perhaps even after a recovery, I would be more prone in looking to buy a pullback in USDMXN than selling it here. Okay, but it's a matter of preference and time horizon, and you get it. Gold puts worked out
rallying big
as we speak. You mean?
Yeah. Yeah, they're only down 16 handles now.
Yeah, I mean, look at this. Still holding this bear flags trend line support, right?
Yeah.
And why not? I mean, we might even see
3080. Where's that?
Something like this, right?
Yeah. I was figuring a little higher, like 3080, 31. But yeah. Okay.
Yes.
Crude getting a lift. You getting a little bit more less bearish there?
Thank you for reminding. Definitely, I'm getting a lot less bearish in the sense that it's overdone and the risk reward isn't there anymore. I'm not saying it can't move lower, but I'm saying that the risk reward isn't there anymore. The last time risk reward was here, and I made it very, very clear, also in the chat room we had discussions like that, was here, right?
Yeah.
I mean, during this recovery, when we retested that area and we were still holding this channel, you still had the risk reward move lower. So far, crude today, so far, because it's still early on the day, it's trying to work on a tweezer bottom, but you have to take that with a pinch of salt, because obviously this is a daily chart, daily candlesticks, and in order for us to even have a clue what's happening with the daily chart, we would have to see a lot more of the day going by, right, to have more confidence, because this is now looking like a hammer and might prove to be a nice reversal candidate, a tweezer bottom, as I said before. But who knows, this might end up being another black candle. So let's see what happens today, and if today's candle looks something like what we have now, or even more bullish than this, then yeah, I think we might see a big recovery. And if you notice, Dale, every instrument that is risk sensitive that we've had a look at, more or less is sending us the same type of messages. Like, you might get a temporary counter move to what we saw during the past 6 days, and then a continuation to what we've seen happening last week.
It's like the market's become binary, where liquidity drives gold and S&P's up together and then down together.
Speaking of which, I want to remind you that we kept talking about correlations having completely broken down. Correlations breaking down is usually something that happens in a market that is completely driven by sentiment. So the markets until like 7-8 trading days ago were definitely running amok to the upside without any thought of what should be driving them, what matters, what doesn't. And now that markets actually have events that are driving them, it's not a coincidence, in my opinion, that correlations seem to be tightening once again. Do we have an interview, Coach? Because I just noticed.
Saeed had a medical emergency he had to help someone with today, so no.
Okay, I hope it's nothing.
He's reliable, so.
Okay, I hope it's I hope it's nothing very bad.
I'm sure he's trading Bitcoin from the emergency room.
Yeah, I hope everything works out well, and trading Bitcoin is secondary.
I know the guy. He could be on being rolled into surgery and get a few trades off. So anyway.
Wait! Don't give me anesthetics yet. I need to execute this.
I'm not flat yet.
Yeah. Is there special indicators for this kind of trading? No, you just notice those kind of things once you get a little bit more experience. But natural gas, says Stavros. Oh yeah, actually, I haven't had a look at it in several days. I've been quite busy with everything else that's been moved up. So let's have a look at it. Okay, so natural gas. Last time we had a look at it, as you see, we were there. You can see here why I very frequently use this type of binary signal, because it's very frequent that you get like pivot areas in the market. This was one of them because we back tested this previous low, horizontal support resistance, that means obviously, and at the same time 50 DMA was capping price action to the upside, and we
Looks
had
pretty
this,
tasty down here.
yeah, and it had this descending channel as well, and it actually made it to that target I had set down here at 160 something. And you know something, coach, I
Nice
agree with you.
divergence. Yeah.
I agree with you.
That's putting in a decent day. Yeah.
This is looking like an interesting
For something counter
reversal
trend.
candidate for, yeah, actually, I might get my
See,
pose.
face, the guys, that's another advantage of doing face, not just for the attendees, but, you know, we have, you know, many eyes out here shooting ideas out at us every day. So
Yeah, actually,
you didn't even look at natural gas. So
thank you, Stavro, actually, because, you know, I had set that target, but I had completely, you know, with everything else that's been moving, you know, I had
that's
completely...
what a mastermind does. It reminds you of what you forgot.
Yeah, okay, so I do like the risk reward here. Now you've actually...
Well, go ahead, click the mouse.
Actually, I think I'm gonna take a stab at it. Yeah, okay. I will.
All right, so Steve Volge getting long natural gas. It's on tape, so we could, you know, ridicule him if it collapses tomorrow, or congratulate him on a great trade, and thank Stavros for pointing it out. You know what? Well, we could blame Stavros if the trade doesn't work.
Absolutely, Stavro. I mean, you're obviously Greek. I don't know if you live in Greece. Send me your address. Yeah. I'll send the bill if it goes
we're
wrong.
gonna blame you, man. You could be us for a little while.
or at least you can, or at least you can buy me dinner to make it up to me. Okay.
Yeah. All
right. Okay, you live in the UK. Okay, so you buy me dinner whenever it's or I buy you dinner if it's, you know, if it works out. Okay.
All right, guys. So that's a wrap.
Okay,
and,
thank you, Coach.
Have a great interview. The rest of the week is really strong.
Oh, give me 1 second, Coach, because I completely, I saw it before and I completely forgot. And, you know, since we have the time, I don't want to, we have Irina asking for my opinion on CAD yen here. So, very simply put, I was looking for CAD yen to break down once we, you know, went below there. I do like, of course, the momentum lower. I think that as long as CAD yen stays below 82, you should keep looking lower. So below 82, because 82 is a horizontal support resistance area and the 200 daily moving average, I think you should be looking lower. Needless to say, any retest of 82 is probably a very good shorting opportunity. Okay, Coach, now I'm done.
Okay, so we have Sebastian tomorrow. He's an Aussie. Has a real nice following. I'm looking forward to seeing his work. And then we have Tavi Costa. I don't have to tell people who he is. Mark Newton on Thursday. And then Peter Goldstein. Everyone should stick around after the NFP for him. Peter actually called for 3,400 back in June, and he's going to talk about you know, some way forward targets. So,
Coach, I'm going to interrupt you once again because I just noticed another question, and I wanted to mention it anyhow.
It's all right.
We have a question about the Aussie. Now, listen, let me be very, very clear about the Aussie, and I said that on Friday as well. You know, Aussie and Kiwi remain bearish. There's no question about it. But the Aussie did hit the 161.8% extension on Friday. So far today, it has quite a bullish day, but so far an inside day. If you look at the Kiwi, it incrementally went to new 11-year lows, and it's recovering today. So bottom line, what do you do here with Aussie and Kiwi? In my opinion, nothing. There is a chance that they will attempt to rebound from here. There is definitely no risk reward in being short at current levels without a rebound. So no risk reward to be short. That means you shouldn't be shorting here. But do we have confirmation yet that they're reversing higher? No. We have just the beginning of what might be an attempt of a reversal. So basically, you know, be a little bit more patient here. Now I'm done.
Okay, everyone, don't just count your pips, count your blessings. We'll see you tomorrow for Turnaround Tuesday. I'm thinking if they flush S&Ps and oil one more time, that it's going to be a nice reversal day. Otherwise, going to be looking towards Friday's NFP. So be careful out there, reduce leverage, drill down on your time frames. Don't try and hit home run balls. Take what the market gives you, and we'll see everyone tomorrow. Adios, everyone.
Bye-bye, Coach. Bye-bye, everybody. See
easy.
you in the chat room.
Okay. You're very welcome, Batal. You too, Sinatra. See you, Monica. So, Steve, you have the screen up. Maybe you could just shut it down for us here.
Absolutely.
Okay. Adios, everyone. Have a good day. See you in chat.